mortgage, but savers could see less return on their investments. The central bank lowered its benchmark interest rate today to 4.25%.
With continued easing in broad inflationary pressures, Governing Council decided to reduce the policy interest rate by a further 25 basis points. Excess supply in the economy continues to put downward pressure on inflation, while price increases in shelter and some other services are holding inflation up. Governing Council is carefully assessing these opposing forces on inflation. Monetary policy decisions will be guided by incoming information and our assessment of their implications for the outlook for inflation.
CBC's business reporter Anis Hadari was listening to today's statement from the Bank of Canada and joins us now live. So Anis, this is welcome news for a whole lot of Canadians, especially those with mortgages. What economic conditions is the bank's decision based on?
Well, what Tiff Macklem is looking at in particular are two things, and they're both related to inflation. There's core inflation and there's headline inflation. Both of those have been easing up, and that's what the Bank of Canada said it was expecting. Just to explain, headline inflation is that number that we hear every month. You know, it's literally the headline. It's the overall number from Statistics Canada. Last go around, it was 2.5% for July, and that's right in the middle of the Bank of Canada's target. Core inflation strips out things like energy that can be really volatile, and they pay close attention to that so that a big drop in things like, say, gasoline prices don't skew what's happening in the rest of the economy. So as inflation gets down into the range that the Bank of Canada wants, they can ease up on higher interest rates because higher interest rates typically cause inflation to drop. Of course, the other issue that many Canadians feel is that higher interest rates also slow down other economic activity, right? They make many things more expensive. You know, you mentioned mortgages before. So businesses and people might spend less when interest rates are higher. And so we were seeing some of that in the early data for the summer. There was a little bit of an indicator of some economic slowdowns and in some of the indicators that the Bank of Canada looks at. And so that was also something that Tiff Macklem was paying attention to. That would be another reason that they were easing up on interest rates, Natasha.
So what's the central bank's position on further interest rate cuts?
Well, a lot of vagueness, as always, from the central bank. If inflation keeps softening, it is, quote, reasonable to expect more rate cuts. Really, Tiff Macklem didn't signal very much to us. Central bankers, not just Mr. Macklem, don't tend to give too many details, in particular because then the markets and investors would just start behaving as though what they've predicted has already happened. But when he was asked if anyone at the bank wanted a bigger rate cut this time, Tiff Macklem paused for a little bit and then said there was strong consensus for the current cut, but that we would see more cuts if inflation keeps easing. They are watching a softening economy. They want to protect against a risk that the economy becomes too weakened. But you know, Natasha, unfortunately, this is CBC News Network, not the Psychic Friends Network. So it's really hard to say for sure at this point what he's going to do next, other than it's possible we'll see more rate cuts in the coming months.
Let me tell you, I would watch the CBC News Psychic Network. But in the meantime, CBC's business reporter Anis Hadari, who can see into the future from Calgary. Thank you.
You're welcome.
Okay, folks, and later this hour, I'll speak with a money expert. I don't know if she's a fortune teller. She's an expert.